If you're thinking of investing into Bitcoin, crypto, S&P 500, most investments, I would definitely watch this video first so that you can understand what is most likely going to happen. We're not going to have any BS here. We're going to cut straight to the point. This is a 5-year technical analysis on Bitcoin itself. So what we're looking at here is a 5-year timeline on Bitcoin, starting in December 2020, ending in December 2025. Along the bottom here, these lines, these are trend lines, and these are important because these show Bitcoin's long-term growth path. Every time price crashes, it falls back into one of these trend lines, finds support, and then starts the next bullish cycle. Bitcoin doesn't move randomly. It follows long-term curves of accumulation and investments. These lines are basically kind of the support. This basically just shows like what Bitcoin is riding on. So every time Bitcoin has a huge bullish movement, it'll break and find support within these price ranges so that it can then push higher. So the first trend line, this is the floor of Bitcoin. I don't think Bitcoin will be reaching $20,000 anytime soon. The only reason that I see Bitcoin crashing under 20K is if we find the next cryptocurrency. I mean, it took maybe 2 years for crypto to get fully adopted into governments and fully acceptable, which was, of course, this cycle. You know, you can see here in 2023, Bitcoin was 17K. And 2 years later, peaks at 130,000, almost a 10x on a huge market cap. I mean, I think the market cap went to like $2 trillion at one point. So yeah, you can see these trend lines basically just show the support. The second trend line is like the minor support. And then the third trend line is like the actual support. This is what Bitcoin has been touching to find enough bullish order flow to have the next boom. So this is kind of just the technical analysis in me thinking what is going to happen. And so these lines here basically just show the liquidity. Most of the time when you see it sweeping past that level, it'll have a pretty good bullish, candle, bullish order flow out of pushing past that liquidity. So you can see here, basically taking liquidity from here, moves way past, gets bullish order flow, takes liquidity from this line, bullish order flow, drop down, bullish order flow, makes liquidity here, bullish order flow, drops down, takes liquidity from here, bullish order flow, and then now it's dropping down to find the next form of liquidity. So another way that you could look at these support zones is kind of like where it gains value. So this is where past these points are where Bitcoin seems valuable to investors, so that they can have put in a bunch of money to cause a bullish reaction. And if you're trading, your screen should not look like this at all. This is just only intensive purposes for the video, and also this is not financial advice. Anyways, so these kind of show the value zones where big time hedge managers, investors, they see value. So once it crosses these lines, they're like, okay, it's on discount, so we can put money into it and invest into it so that the price goes up. And these purple rectangles here, this is another confluence. So this basically represents order blocks and breaker blocks. So the order blocks show where there was a ton of buying pressure. So like, for example, in this candle right here, selling pressure was selling down to the bottom of the order block, and then buying pressure was able to push out, have a huge bullish reaction. And this is what scares me is this breaker block here. Look at the selling pressure. When the buyers try to buy up into this 120 to 130 zone, the selling pressure is just way too high and they cannot close above even close to 130. And then we've seen since then, price is just taking a dump. So with all of that being said, what is my prediction as a non-financial advisor? My prediction is that by 2027, Bitcoin will be under $50,000. easily. I think it'll easily retrace back into this zone. And if it pushes out the bottom, then it'll be somewhere in this $30,000 to $20,000 range. Kind of like sitting a little bit above this consolidation period here. It'll be like within this zone. And this is by 2027. So if you were planning on investing into crypto over multiple years, 100% you need to wait until mid 2027, because Bitcoin will be worth 1/3 of what it is right now, even after tanking a huge chunk. Over almost $30,000 it tanked, and it will still be 1/3 of the price that it is today within late 2026 to late 2027. It will be within this price range. I have zero doubt in my mind. And I mean, it is just insane how fast it's tanking. I think right now it could potentially tank all the way down to 65,000. It's not unheard of. I mean, it just lost 30 grand within a month. Within 1 month, it lost $30,000. I don't think it will tank that fast, though. I think now, if you're looking at it short term, it could go all the way down to one of these trend lines, maybe take one of these forms of liquidity above 70 grand, and then possibly push a little bit higher, maybe back to where it is now. But that is definitely something that you should be wary about if you are looking to invest in Bitcoin. If you're looking to invest in Bitcoin over a period of years, wait until mid-2027 so you can get in around 50 to 30K. If you're looking to get in now, maybe wait about a month to see how far it goes down. Look at the chart like this, wait for a green candle to appear, and then it's possible that Bitcoin will start going back up. If it finds the strength to push above 103,000, then it could possibly, in very rare cases, it could possibly go for a new all-time high. I don't think that is what's going to happen, because in time, it shows us, crypto winter shows us that most cryptocurrencies die over the winter. Like you can see here, in 2021, the cycle ended as the winter started. Boom, 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 huge crash. You can see the same thing here. Kind of. I mean, in 2017, it was different because Bitcoin just wasn't really known about. But as you can see, as the new year started, it crashed. Even here, when it was at $200, look at that. Boomed in December, crashed in February. That is the 4-year cycle, guys. Every 4 years, it'll go on a crazy run for about a year and a half. And then as the new year starts, which would be the 5th year in the 4-year cycle, it crashes. And the 5th year in this cycle will be 2026. So it is very possible that it could crash down under 70K, under 50K. But I think by 2027, it'll be within the $45,000 to $55,000 price range. And then as the year closes out, it could drop down even lower, all the way down to 30 grand. It's possible that I will. I mean, if we're just looking at the chart here, please let me zoom in. Hello? Okay. As you can see, it dumped at the start of the new year. And the peak here in 2019 is basically the floor here in 2023 as the new year cycle started. So it is very possible that this cycle, the very, very bottom of the barrel price of the very bottom of the barrel price of Bitcoin will most likely be in the $31,000 to $36,000 range by mid-2027. You can quote me on that. It is going to happen. And this is not just from me. This is from my father, who has been in crypto since 2011. Shout out, Dad. So now let's look at XRP. If we're looking at XRP in the 5-year cycle, it is not looking good, guys. It is really not looking good. If you're looking to invest into XRP, I would definitely hold your horses, because if you don't know about Ripple, the parent company to XRP, Ripple has been known for very many scandals in the past, where it has basically been holding the coins and selling the coins at a certain price, which doesn't happen. The owner of the coin is not supposed to The owner of the coin is not supposed to control the majority of the supply. So when you see an owner holding the majority of supply and selling it at a certain price, that is a monopoly. That is 100% a monopoly. You cannot get any more monopolized than literally being able to control the price that you sell your coins at. That doesn't make sense. That's not happening anymore in XRP as far as I know. But we have definitely heard some fishy stories recently. Just in general, if you bring in politics and all that, I'm not going to do that during this video, but there are some pretty crazy stories going around. So it would not surprise me at all if it came out that XRP was actually still a monopoly and just absolutely shits the price down to 50 cents. I mean, this is the only trend line that I could feasibly draw. So as you can see, we're not seeing any support for a while, and these are the forms of liquidity. I mean, look at this. Within 1 week, XRP went from $2.90 to $1.30. It dropped down over 50% in 1 week. And there's really still people telling you to buy this coin. Come on, man. These are the forms of liquidity. Where do I think it's going to be by 2027? I really don't know, man. If we see Bitcoin go all the way down to 30K, then I would not be surprised if XRP goes underneath these levels, maybe here to 90 cents, since we can see this is where it was at the very start of the cycle. We could see it at a 90 cent XRP, which isn't too bad. I mean, if you were able to get in before 50 cents, you might just want to hold it. But if you are planning on investing now, I definitely would not do that over the next few years. If you're looking at it short term, hey man, it's possible it could just dip under $1.80 and then it could push back up to $2.50. Who knows? But yeah, that's XRP. Definitely be very wary of that. If you have a bunch of money to go into crypto, I would just wait and then buy Bitcoin in the future. Next, let's look at a non-crypto. Here we're going to be looking at the S&P. So now if we're looking at the S&P from 2020 to 2025, you see much healthier price action. This is not a cryptocurrency, so it doesn't have the crazy swings that we see in crypto where it can drop 50% in 1 week. But as you can see, it has its big breaks. You can say that the draws in liquidity would be like here, maybe here, and then here, and here as well. So these are the forms of liquidity that we could see it pushing within the next few months, maybe a year. It just depends what the economy does overall, because like I said, this is not a cryptocurrency. Obviously, cryptocurrencies operate nothing like traditional companies where they can show earnings, get investors, release products, and innovate in new ways. Bitcoin is kind of just like, or not Bitcoin, cryptocurrency in general can't really be as creative as companies are. Yes, there is room for innovation because you can be like, oh, everyone uses XRP to buy coffee in the mornings now. But you can't be like, oh, XRP is now releasing glasses. It can't do that. So it would be hard for them to show, earnings, revenues, other than just people solely investing in it. And of course, the S&P is a mixture of over 500 different companies, the top 500 Fortune 500 companies globally right now. So with this, obviously a much longer term investment. But even with the S&P, man, we could see it potentially dumping within the next few years. It is very crazily overvalued right now. You're telling me that within 1 year, it went from 6,000, which was an all-time high, to 7,000, which is pretty unheard of, because that means you need to be moving the market cap of all these companies that you're investing in. And then you can see, of course, a big dip here, searching for liquidity, broke that liquidity, and formed new liquidity here at the bottom. Big bullish reaction, but what we need to be talking about is how it dumped over $1,200 within 3 months. Pretty unheard of, man. Pretty unheard of. It's just whales moving the market. So overall, I think with the S&P, it's a much safer investment. It's way less risky, but then again, it's way less rewarding. So we'll see, if the big bubble pops because every stock is overvalued right now. The Buffett indicator is at 217% and climbing, meaning that the overall stocks, not crypto, just stocks, American stocks, maybe global stocks, I'm not 100% sure, they are over 2.5 times, no, not 2.5, they're over 2 times more valued than the current US GDP. And why would that be important? Well, the US GDP is the products and services that these companies are putting out. And if you're telling me that the investments are more than double what the companies are producing in America, every time that we see the Buffett indicator get over 100%, most of the time the bubble pops and the economy crashes. So the Buffett indicator being at 217% is not a good sign at all. It's a good sign for investors because they're like, hey, man, it's almost time to short the markets. And who knows? I mean, we've seen a straight month of red candles, so it is possible that this is the start, this is the tip of the iceberg, and it's going to start going down soon, reaching these forms of liquidity. If we're just playing by the same rules that I did in crypto, we could possibly see that the S&P is going to be around $5,300 sometime, once this cycle is over. Of course, the S&P doesn't really follow a cycle, but what I'm saying is like once the economy starts to, crash a little bit, which is definitely coming, we will see the S&P dip down to $5,200. If you have a bunch of money in the S&P, I wouldn't really worry about it, especially since most people didn't start investing after 2024. If you're someone young like me, then you have a ton of time. You have most likely at least 40 years that you could be investing. So right now is not the time to invest at all. Continue to wait, and I would say the best buying opportunity would be mid-2027. After the crypto cycle resets, after Trump is exposed for all the Epstein files and all the drama is out the window, we could potentially start rebuilding and seeing something new globally and not just in America. And the last asset that I'm going to look at is not a stock or a cryptocurrency, something very popular. It is gold. Yeah, I was like, I thought I had made trend lines for gold. Okay. So the final asset that we're going to look at is not a stock or a crypto. It is something very popular today, which is gold. As we can see, gold is at major all-time highs, reaching up to $4,000 compared to the US dollar. Now, this can continue to go up because the price of the US dollar is going down, meaning that gold is more valuable as compared to the dollar, which is why we see emphasized growth on gold overall. You can see here are the trend lines and also possible support zones and the liquidity. We can even make a little form of liquidity right there. I think gold is possibly the safest asset that if you want to invest in today, and the only reason why I think gold is the safest asset to invest in today, if you're planning on maybe trading it, holding it, gold is more valuable because it's put up against the dollar. If you're doing XAU USD, as the dollar becomes less valuable, gold becomes more valuable. And you can argue the same thing for crypto, but crypto is completely different. Crypto is 100% on a 4-year cycle. Ever since crypto was created, it's been on a 4-year cycle. So this is something different. Gold is also just, a globally known asset to hold, to use, to create with, whatever. So the reason why we've seen so much growth with gold is because gold's value doesn't really change. It's just that the US dollar is losing value. So we've seen recently trillions of dollars going away in stimulus checks, trillions of dollars in US deficits, trillions of dollars in debt rollovers. All of that would make the dollar go down. China, Russia, Turkey, India, the Middle East, and of course the US, they're all collecting gold like crazy. And the reason why is because they don't trust the US dollar as the world reserve currency, which is what it is right now. and gold is an asset outside of all currencies. It's a feasible, tangible object that you can touch, you can hold, you can keep. And it's also something that is unsanctionable. So the US likes to put sanctions on other countries with the US dollar as a way to punish them. You cannot sanction gold, so other countries are buying gold like hell, and the US dollar is going down. So this gold is a really good investment, something that I'm invested in pretty heavily, of course. You know, also this final trend line is like a this is just the growth trend line, so it's looking like it's following that nicely, and it's going to all-time highs. But of course, like always, if the economy crashes, we could see this go down. We could see it go up though, because of course the dollar, or the value of the US dollar, is going down, so that would cause this specific ticker, gold against the US dollar, to go up. Global investors use gold to hedge risk against wars, and there's a ton of war going on. The reason why this happens is because gold is an unsanctionable, tangible currency. So, like, the US dollar is the world reserve currency, but the US has power over that, so we can use it to place sanctions on other countries. You can't do that with gold because it's an object that you can hold. It's not the world reserve currency, and no country has power over it. It's something that anyone can buy. So that's why you see countries like China, Russia, Korea's, both of them, Korea's both North and South Korea, buying the gold. Europe's buying the gold. Everyone's buying the gold, and the reason why is because it's not a currency. It can't be taken from you. It can always be bought. And if you're putting it up against the US dollar, which is always depreciating in value and is about to depreciate a lot more once Trump gives $2,000 to everybody, that's most likely your best investment. So where do I think things are going overall? I think Bitcoin is going to be within the range of 30 to 35,000 by the mid to end of 2027. Same thing with XRP. I think XRP is going to be within maybe $1.90 to, not $1.90, 90 cents to 50 cents by 2027. It is easily going to sweep this liquidity here, going under $1 pretty easily. Also, just ignore these arrows. This is one of my symbols. I think the S&P 500 will be in between 3,500 and 4K by the end of 2027. And I think gold will most likely continue to rise because all the reasons that I listed before. It's untangible, unsanctionable. All the foreign countries are buying gold, and the reason why is because so the reason why gold is so hyped up right now is because, especially in this chart, it is going against the US dollar. And so why do we see gold going up against the US dollar? The value of gold doesn't really change. It's just that the value of the US dollar is going down. So when you put it against the US dollar, then it's continually growing. So many countries are buying gold right now, buying up all the gold. And the reason is because the US dollar is the world reserve currency. And so America is able to place sanctions on other countries as a way of saying fuck you to them. And obviously other countries don't like that. People who have tensions with the US tend to buy a bunch of gold so that they can have, foundation in their economy in case the US tries to put sanctions on them and fuck up their economy. They'll have gold to back that up. And I'm sure that eventually the US dollar won't be the world reserve currency and won't be, we won't be on the dollar standard or whatever, the American Army standard. And we'll be able to move on from that, hopefully. So yeah, if you have some money to invest, I would definitely hold out and wait until 2027, especially if you're a new investor like me. You're going to have at least 40 years to find your time within the markets to be able to get in at the bottom and continually investing as it goes back up. But yeah, with that being said, I just wanted to tell you guys a little bit about what I thought on these four different assets. But yeah, with that being said, I just wanted to kind of share my knowledge on these four assets: Bitcoin, XRP, the S&P, which is just kind of stocks in general, and lastly gold. Out of these, the best choice if you're planning on holding it for a few years would be gold. Definitely not either of the cryptocurrencies. The S&P is good if you're planning on continually investing over a long period of time, no matter if it goes up or down, because it'll never be a huge drastic movement unless we see like another Great Depression. But the economy just works so differently nowadays that we most likely won't see another Great Depression. I think if we were going to see another Great Depression, it would have been during 2020, which didn't happen. Obviously, we saw investment skyrocket because the US just kept printing more money. Um, but yeah, with that being said, that's about it for today's video, and I hope you all appreciate it. There's going to be more finance content coming soon. Click subscribe if you do like finance content, or you just want to see videos of me gaming, because I also do that on this channel. I like to game, and I'll upload like my past lives and stuff onto YouTube. But yeah, if you do like finance content or just content in general, I would very, very much appreciate if you guys subscribe to this channel. We have 22 subscribers right now, so every person that subscribes, I really appreciate it, and thank you for believing in me and the content that I create, and I hope you guys will be here for more. And yeah, with that being said, I hope you all have a very blessed day. Peace.